Banking conditions in the 9th District for the second quarter of 2014 were mixed, with some gains in loan growth, but relatively flat profitability. I'm Ron Feldman. I'm the Executive Vice President here at the Federal Reserve Bank of Minneapolis, and today I'm going to talk about banking conditions and looking at the second quarter of 2014, what kind of results we had. Before we get started, I should say what the 9th District is. It consists of Minnesota, Montana, North Dakota, South Dakota, the western portion of Wisconsin, and the upper peninsula of Michigan. And I'm only going to be describing a few of the major trends that we saw in the second quarter. As you can see from this website, we've got a lot more information where you can dive into it as deep as you can. In terms of a summary, there were some gains in the quarter, but earnings were flat. And I'll explain a little bit why I'm contrasting the two, that is between the mixed and the earnings being flat. Overall, there was a decline in problem loans, so that's saying that the amount of loans that are not being paid on time in full, that declined. And there was some gain in loan growth, which is another measure we look at. So those are improvements. On the other hand, earnings have been flat for some time. They're below historical normal, and they remain so. So I would say it's a mixed quarter overall. So what I'm going to do is I'm going to walk through each of these 3 points, that is problem loans, profitability, and loan growth. I'm going to show you some data on each of them, and then give you a sense of how the states in the 9th District performed for each of these measures. So first, let's start with problem loans. As you can see from the graph, the middle line of the graph, that has really far below the historical norm. So let me explain a little more. So the dark black line on the graph is the historical normal level for problem loans for the median bank in the district. That is, if you took all the banks in the district and you lined them up and you picked the middle, this would represent what that bank has been doing over the last 20 years. And you can see that the median bank as of today is actually having a much lower level of problem loans than what we've seen historically. So there was some improvement in this ratio, but it was already at a very strong level. Another way to put it is that the problem loans, which really were what got banks in trouble during the crisis, not only are we doing much better than relative to the crisis, we're doing much better than we've done at any point since 2000. What does that look like if you examine the states in the district? So in this graph, there's really 2 panels. The upper panel in red shows you all the states where problem loans are less than the median for the district. And on the blue bottom panel, it's all the banks where problem loans are worse than the district. And what you see is basically without exception, one exception which I'll discuss, that problem loans are continuing to fall. And the one exception, which you see in the blue on the bottom panel, is the upper peninsula of Michigan, where they saw a spike in the amount of problem loans already at a high level. So that's really an outlier compared to the rest of the district, where really we're seeing problem loans at very, very low levels. So let's move now to profitability. So what you see here is that profitability is flat. And unlike problem loans, where we're actually doing better than what we've done historically, here you can see that profitability is actually worse than what we would expect to see relative to historical norms. Moreover, for the last roughly 2 years, you can see it's been pretty flat. And this is, of course, concerning to banks. I think the expectation that banks, and frankly bank supervisors had, was that as conditions improved, earnings would return back to their normal level. And that's just not what we've seen, and we continue to not see it as of the second quarter of 2014. Looking across the states, you can see, using that same 2-panel type of graph, really the same trend. There's very little improvement for any of the states. Of course, some of the states like North Dakota and South Dakota are already at strong levels, but if you're looking at a quarter-to-quarter change, it just really was not that strong. And finally, let's conclude by looking at loan growth. Here you can see that it's sort of the perfect match in that relative to history. The problem loans were doing better than history. The profitability was doing worse than history. Loan growth is right at the historical norm, and it's been improving steadily since the crisis. This is looking at year-over-year loan growth, which is now a little bit above 5%. So in terms of problem loans, we're really, crisis is long behind us. Loan growth, back to normal, but again, earnings is the real part that stands out where we're flat. In terms of loan growth across the states, what do we see? Other than South Dakota, which is already at pretty strong levels, we've seen uniformly some improvements in year-over-year loan growth. So again, to sum it up, it was a mixed quarter. We continue to track earnings closely. They're not at a level that's a threat to safety and soundness, but they are low and have remained lower than what we would have expected to see. Thank you.